Hi, and welcome to an early global view on Wednesday, October 21st, 2015. It is currently 7:45 a.m. U.S. Central Time. Once again, coming to you just a bit later than usual because we wanted to see as much price action as possible prior to the U.S. equities opening due to the strength of the equities, which almost seems a bit odd except for that continued central bank influence. Only we think it is now morphing over from the influence of the still very accommodative Fed, kind of bad news is good news, into anticipation of what we might hear from the ECB tomorrow on Thursday, October 22nd. And we have to ask, what does all this mean to the markets? Well, this is why we wanted to presage this with noting we waited because the equities were so firm. The S&P 500 is up at 2029, and that's up $8.50 on the day. And, back up right near yesterday's high here, up at 2031.5. They've been up to as high as 2033.5 this morning. So they're getting very close to that 2035 to 2040 next heavy congestion we'll explore on the intermediate term charts. The lower support, of course, is back at the overrun resistances after holding into, with some slippage last Wednesday, into the 90 to 88 area, slightly below it, gapped up on Thursday, even in spite of weak data. Europe liked the idea. Again, bad news is good news. They think the Fed's going to keep things pretty accommodative with the weak news. Market barely reacted back down to the top of 2088 to 90 on Thursday morning, and then was off for a push-up by later on that day above the key 2010 to 2015 resistance. And you'll notice how on setbacks, this is later on Friday, 2013, first thing Monday, 2015, and they haven't been back there. Yes, they've been churning sideways. Yes, the hourly MACD has slipped back below the upper runaway band. But again, indicators are indicators and price is price. This market churning sideways, much like we saw last Wednesday, cannot even get out through this overall upward channel, which is pretty prominent at this point. Even though it's aggressive, it's from all the way back down at the 1862 low. So we're basically $150 higher from where we were back on that test, going back in front of the employment report a couple weeks ago, and several weeks ago, I should say. And 1866 was the key level then, and we spotted this erratic activity back on Thursday the 1st, where it tried to fail but stayed up, and that carried the day even into that abysmal employment report that Friday. So, what do we look for next? Well, if the market backs off today, by later on today, this is up to about 2025 or so. So we'll have to keep an eye on that. But so far, this market is showing where it doesn't even want to get back down to the channel support. You certainly look for 2035 to 40 if it pushes up further. Much above 40, it's back in a whole higher range where the next resistance is not till around 2060. And of course, the 20 to 15 to even tolerance down to 10 or so remains support below. And that pretty much does it for the short-term view of the S&P 500 future.